What's up, guys? This is Jonathan. This entire video explains what this order was, the intention of the order, and right now I'm going to join them and I'm going to be a $1.55 bid, and I got filled. Bought 10, $1.55. I'll put on the last trade so you guys can see. Just bought a 10 lot for $1.55. So let's take a little step back. In the middle of the pandemic, what's doing well? Well, online retailers, right? Brick and mortar, rest in peace. Online retailers are doing well. That's what I was researching. Came across SFIX. I have you on a daily going back 2 years. So we have the 100 and 200 period moving average, just keeping things really simple. Stitch Fix got smoked in the heart of the pandemic, starts rallying, gets over its 100, 200. We want to see now if it could stabilize. So now let's go to the options. Now, when I first came across this name, these 8,000 here, they didn't really jump out at me because there were so many other big orders that were flying through SFIX. But watch what happens when you look at the short-term behavior of Stitch Fix the day that these trades were made. So here's Stitch Fix, guys. We are on a 1 minute chart because I only want to look at the data from the day those big trades were made, and that was Friday, May 15th. Today, it's Monday, May 18th, before the opening. Here's the entire price data from Friday. It's a 1 minute chart. And again, going back just one day, I want to see when the big movement happened. There was big movement here, but the real big movement was right here. That was, if we were to summarize the day, Stitch Fix was strong all day. It got a little spiky in the morning, came back. But the real significant move, if you were trading this, was all of a sudden, Stitch Fix went from $21 all the way up to $24. And it happened quick. Now you might be thinking, but Jonathan, came right back down. Who cares? We care. Let me show you why. I opened up time and sales. On Thinkorswim, you could just scroll down to the bottom, find options, time and sales. Whatever platform you're using, they're going to give you options, time and sales. I have the chart up here again. We want to look at what the heck happened. That's a violent move, right? Think about it. It's 21 up to 24. That's 3 points. That's a 15% move. 15% move happens in the middle of the day on a stock you own. You got to figure it out, right? And before I get into this, guys, again, I was a market maker for 5 years on the floor, Chicago Board Options Exchange. Floor traders use unusual options activity to value options. It's the only tool we would use to value options on the floor. If you want to learn more about unusual options activity, in the video description, I'll leave a link for you. Let's look at the timestamp. If we go back here, we can see that right around that 11:40, 11:45, that's when something happened. But what was it? Let's go down here. You'll see there was 2 really big orders around that time. We have the June 25 calls, traded 5,697. That appears to be about 6,000 of the 8,000 that traded. And then if we look at those 23 puts, those aren't going to hold the weight, because what those were a deeper in the money trade. What we want to do is you want to follow the premium, the extrinsic value, the options that are out of the money. So that means with the stock at 21 on the call side, you want to follow 22 and higher. With the stock at 21 on the put side, what really is going to matter is 21 and lower. So we're not as concerned with that deep in the money stuff. But we are concerned with out of the money, because out of the money is all premium. It's all fluff. There's not any stock. Someone's betting on Stitch Fix getting over 25 by expiration. Not only 25, they want Stitch Fix to get over 25 plus $1.90. So they need Stitch Fix to get $26.90 or above to start making money on this monstrous trade. How do I know that they're buying calls? Let me show you, and I'm certain. Okay, so again, I tossed in the 1 minute chart. We are looking at these. They happened at 11:41, which is going to be right around here. Here's what happened, guys. The customer came in and they purchased 8,000. Time and sales, we could see it's 5697, but they really purchased 8,000 25 strike calls for $1.90. When they purchased a shit ton of calls, the market makers, the people on the floor, or not necessarily on the floor, on the computer, making markets for the Chicago Board Options Exchange or for any exchange throughout the world. Those people sold collectively 8,000 of the 25 strike calls. And here's the important part. Here's why the market moves so much, and you can see it in the 1 minute chart. 8,000 of the 25 strike calls. Hypothetically speaking, let's say the stock is at 100 and you owned 8,000 of the 25 strike calls. That's the same exact thing as owning 8,000 times 100, 800,000 shares of the underlying stock, because it's so deep in the money. Again, the $25 calls, if the stock was at 100, would have a delta of 1. They would just be stock. So if that person did the order then, they would be long 800,000 shares. Now the reason I use an example like that is for options. If you think of something silly like that, in my opinion, it really helps people understand the example better. The stock's not at 100. The stock's at 25. Or the stock's at what, 21 or 22. They bought the 25 strike calls. The delta's not 1. So what they really did was 8,000 times 0.39. So 8,000 times the delta. That's going to equal 3,120. So they're not long 800,000 shares, but they are long 312,000 shares of stock. Again, 8,000 times the delta of 0.39. That's where we're going to get to 3,120. One share of an option equals 100 shares of the underlying. Okay? So if the call buyers are in a sense of the same thing or the same risk profile, on the upside, on the downside, their risk is fixed. If they're long 312,000 by choice, they want to be long. They're the customer. They probably know what's going on. These guys over here, they're just guppies. They're just making bids and offers. Don't run us over. Don't hurt us. Well, these dudes collectively are short 312,000 shares of stock. They don't want to have an opinion. They just want to trade volatility. They want to stay delta neutral. So in order to be delta neutral, when you're short 312,000 deltas, you got to buy deltas and you got to chase. Now we get scared. Maybe we're not going to get ours. Maybe it's going to go to 100. That's why it gets so extended. Deep breath. It all comes back. I just did a 10-minute video going over this exact trade, And now I can get the same exact calls that they bought on Friday. Today is Monday, for 50 cents cheaper. I'm going to do it. So right here, $1.50 bid at $1.65. I like June because I got earnings coming up June 3rd. So I too am going to join you. I'm going to put a bid to buy, and I got filled. Bought 10, $1.55. I'll put on the last trade so you guys can see. Just bought a 10 lot for $1.55.